It's February 4th, 2014, current time, 10:51 GMT. Jay Meisler here with the daily Forex Outlook update. You can see by the price action overnight how nervous the market is, as it's been in a risk-off mode with stocks melting down. But you can see how hypersensitive it is to not only economic data but to central bank meetings. Last week, the New Zealand dollar fell out of bed after the central bank did not raise rates. Today, the Aussie dollar spiked over 2% from its low after the RBA took a more balanced approach. We have the Bank of England meeting on Thursday, and we have the ECB meeting on Thursday. As for the euro dollar, it's now traded the big figure 135 3 days in a row. What makes that significant is if this pattern continues into Thursday, it might be 5 days in a row. And as you know, the longer it trades around the big figure, the greater chance of a directional move once that pattern is broken. Still contend that the euro dollar should have a limit until we see what the ECB does. But that event risk seems to have a real two-sided risk, and that suggests we could see some big moves on Thursday. Of course, ahead of it, we have the ADP tomorrow and the non-farm payroll from the U.S. on Friday. As far as the ECB meeting goes, and this is something I want to focus on, yesterday Draghi said that he would be willing basically to not sterilize bond purchases, which I read as being QE, but only if the Bundesbank publicly endorsed it. So without a public endorsement, QE is off the table, and if we had QE, then we might see the euro really tumble. That leaves just a rate cut as a policy tool right now. I think maybe they have another lead but it doesn't look they want to do that either. So it looks like it's a rate cut, and this is what people seem to be betting on based on the drop in inflation reported last week. But this seems to be a tough call, because what happens if they don't cut rates? We could see the euro dollar spike, although Draghi will probably hold out that risk during his press conference. So it's kind of a tricky market, but one where those who are betting on the downside seem to be betting on a rate cut. And we know how the ECB has a history of disappointing. So there's a big event risk coming up on Thursday, and that's why the euro dollar seems to be trading in this, well, at least a two-way market right now, around 135. If you look at the daily chart, you got the 50 and 20-day moving average about to cross, but right now converging. A key level is this trend line, and that's what I'll focus on, at least in the daily chart. And that doesn't come into the upper reaches of 136. I think it's 130, say 136.80 or so right now. If you look at the 4-hour and the 1-hour chart, key level on the upside is 135.72, which was the spike high right before we made that new low. And you look at the lows here coming in around 134.75 or so. There looks like a bottom here, but would have to take out first 135.38, which was the high overnight, and then you got 135.50, which is that psychological level. More important, 135.72. So we're almost like in a 100-point range right now. 134.75, 135.72, and the market, obviously focusing on stocks, but in the case of the euro, looking ahead to the ECB meeting. And that's really it. We're going to expect more chop here. Perhaps if stocks are able to get a little footing, we see some pressure come off the yen, but that would have to get above 102 to ease its risk of a real meltdown if it got below 100. There obviously was some buying in the upper 100s just overnight or last night, and that capped that move. So here we are. We're Tuesday's kind of a limbo day. I think less pressure than we saw. Less of a panic than yesterday, and you'll see that reflected in various crosses. As for the Aussie, it got above 89 briefly. I'm not trading that at the moment, so no real comment other than saying when a currency moves 2%, that's quite a move in one day, but seems to, at a minimum, restore the two-way risk. So that's it for the moment. Stay tuned to GBI Forex for intraday updates.